Hello, everybody. So, still pretty busy this week on the road, so kind of a different video, different from the usual PowerPoints, but there's a few things that I wanted to share with my viewers, and hopefully you find some value in this, even though they're not as curated as my usual videos. The first thing that I want to share is that everything's expensive right now. I'm happy, like it's good. It feels good when you open the portfolio, but everything's so expensive right now, and so I've been buying a little less, except for SoFi. I've actually added to SoFi this morning, and I find that SoFi is one of the stocks that has not run up and that has actually, in fact, gotten cheaper right now. And I don't understand it. I think SoFi is doing excellent. I think they have a low cost of funds with their deposits, with their direct deposits from all of their customers. They're gaining new customers, which deposits new money onto SoFi. That gives a very low cost source of financing for SoFi, and then they can make much more profitable personal loans. Now, you may know that my reason for investing in SoFi is the adoption. I'm interested in the banks from the standpoint of a consumer banking adoption. That's kind of my main rationale, and this is a company whose product is getting adopted very quickly, and it's so cheap right now, and so I'm happy to add. When you compare, there used to be a time where SoFi was trading, say, almost in line with Palantir, and both stocks kind of diverged. I'm talking about as far as the stocks that are loved by retail investors. So I use SoFi and Palantir as example of two stocks that are loved by retail investors, and they kind of took different directions. And SoFi has stayed entirely flat, and Palantir has gone all the way of quote unquote overvaluation. But in my view, in time, the market we'll see the value of SoFi. We do not need branches anymore, period. We need neobanks. We need neobanks. Neobanks are the future, So is it the Cash App? Is it Ally Bank? Is it all of these modern new banks coming on the market? Many of you have mentioned one in the comments section, but I haven't had a chance to look at. But I know there's a few of them. SoFi is the leading one, in my view, with Cash App, along with Cash App for neobanking. And Gen Z, they love SoFi, and there's SoFi Stadium. I saw on Twitter people saying, I don't know actually anybody who uses SoFi. Well, I do know. I do happen to know quite a few people who use SoFi, who are younger people, and so yes, people use SoFi, right? It's just 7 million accounts. So anyways, and you'd have to be people. You kind of have to know people who have student loans. So depending on your group, if you have a bunch of people that you don't know that don't have student loans, well, maybe they didn't go through SoFi, through the student loan door. But SoFi actually historically has recruited a lot of new customers through that student loan refinancing business. And so even though it may be a small business as far as the numbers go, as far as recruitment of new customers, I think it's a big business. And of course, that part of the business is coming back, right? SoFi, the growth in customers for SoFi was pristine. So this is a classic example of a company where I believe the stock should be trading much higher, in line with how much more customers they have and how much more revenue they get every quarter. The company gets bigger every quarter. The stock price, in theory, should track how much better the company gets. And right now, market is pretty depressed, so that doesn't happen this way. Always remember this stat. This is my favorite stat, right? Bank of America and JP Morgan, they have about 50 million digital banking clients each. Now, all of SoFi's customers are digital banking clients. SoFi has 7 million. So if you do the ratio of the market caps of SoFi to these big banks, you realize it's the cost per user of SoFi is next to nothing. You pay next to nothing. And, people may say, there's tons of money at Bank of America and there's tons of money at JP Morgan. Well, yeah, but do you invest for the past or do you invest for the future? Where's the money going to come in the future? It's going to come from Gen Z, the next generation of people who are going to be earning these high-paying jobs and who are going to be inheriting this money from their grandparents and parents. So if you invest for the next 20 years, which is what I do, well, 10 to 15 years is more my horizon. But if a stock keeps performing, I don't have an issue keeping it until I retire. If that's what you invest in, you want to be where the customers of the future are going to be. And in my view, there's no doubt they're going to be in a bank that does not have branches, a bank that is an app and just an app. And if you look at the offering of SoFi, I believe if you're just starting out at banking, this is very compelling to you. You sign up, you do direct deposit, then you get $250. Their SoFi Plus offering is very compelling. You get your paycheck 2 days early. You have plenty of banks that still don't have that. And it's actually quite important for a lot of people when they get starting out. They want to have a paycheck early. It's not up to you to judge. It's not up to me to judge whether it's good money management or whether it matters or not. The market tells you what they want, and they want these things, and SoFi offers it. And some legacy banks still offer 0.01%. And the business of traditional banks, which is your rent seeking because you have bill pay and your mortgage, your payments, everything is entrenched into that one bank, and so it's a lot of work to switch that bank. That's to switch away from that bank. That's a rent seeking method of holding on to your customers. But in my view, you should try to attract new customers, right? And try to break these rules of rent seeking. And it becomes easier and easier and easier to switch banks too. With digital technology, it becomes easier and easier to switch bank. Not to mention, Gen Z love crypto. They love to invest in cryptocurrency. SoFi has cryptocurrencies and Bitcoin. Main banks don't have it yet. Main banks still don't have any of that, right? So, anyways. That's point number one. SoFi. I like SoFi right now. I like the price. Now, let's talk about Palantir. I'm done selling Palantir. I am done selling Palantir. Many of you in the comment section have pointed out that I've made a mistake selling Palantir. I will point out that I sold a bunch of my Palantir at around $18, and I swapped much of it for Tesla when Tesla was trading at $197. So I'm okay. But I'm happy with my position in Palantir. Palantir is like about 5% of a portfolio now. It used to be over 10%. And I am more willing to admit that evaluating the potential of an AI company, the cash flows in the future, evaluating the present value of those cash flows is very, very, very hard to do, because these are companies that are going to have step changes, and that there's going to be a step change at some point in the future for a company like Palantir, step change in their revenue, and it's very tough to estimate when that comes, but the present value of Palantir may in fact be very high. I am quite bullish on AI, and I'll conclude this video talking about this book that I've been reading. Palantir has done a lot of good stuff, actually. So the Gotham, you may know if you followed my channel that I own Palantir, and I've owned Palantir because of their military business. The military business is as strong as ever and as needed as ever. There's a little bit of slowdown in the military business right now, but that's because of the elongated sales cycle that a lot of governments have. You may remember me calling AIP a little bit of hype when they first released it in April, and that's how it felt. Now, it's worth noting I didn't act on me calling it hype in April. I sold much of my Palantir 2 weeks ago when I was trying to buy Tesla super cheap. So I didn't, I waited and see. But the more I read about AIP, the more it seems like it is in fact not hype. But you have to put back in the context of, every single company out there really seeing a natural language, type chat box with their app. So I think I've been largely wrong to have called some of the more edge cases of AI hype, and this is where Nvidia is going to come into play. We're gonna know on Tuesday, but I'm backing off from that statement that AI is hype, and actually there's a lot of very, very real things with AI. And if you look at Palantir, my main complaint about Palantir, if you remember my early day videos, was that commercial revenue, the foundry business, was slowing down. And it is actually not true anymore. It is back up with commercial revenue growth in the USA back at 33% year over year. So commercial revenue is growing again, and I love to see that. Now it seems like the slowdown is in the government section. That's where the slowdown is. So this is a company with uneven growth, which makes it much harder to analyze with financial lenses, right? You need to have a qualitative conviction in the company, not a financial conviction looking at the numbers, because it fluctuates too much. And by the way, you can see right when Palantir was at 18, which seemed quite a bit expensive, is when Tesla got cheap, and so I was pretty happy to do that swap. And other companies were cheap too. You may remember HIMS was very cheap, so I swapped a little bit into HIMS and a lot of companies that I like. I'm done selling Palantir. I'm not selling Palantir anymore. Now I want to talk about Nvidia. Nvidia's earnings are on Tuesday evening. Tuesday evenings are Nvidia's earnings. And, I've begun to make a case in prior videos whenever I've discussed Nvidia, but Nvidia is actually not that expensive if the growth of Nvidia is actually much higher than analysts predict. But what if that growth is going to be 100%, which I've seen some people make a case for, right? If growth for Nvidia, forward growth, is 100%, that price for Nvidia is not that expensive. It is not that expensive of a price to pay. And I'm getting more and more bullish for Nvidia because it's true that their products underlie just about everything in the AI revolution, right? The AI revolution is powered by GPUs, and they have the best GPU technology. I don't know if you had a chance to listen to the 30-minute video about their H200, but when you look at the video of the H200, the takeaway is that the exponentiality of compute is alive and well. And this is a book that I'm almost done listening. I'm driving right now, so I'm listening to the book. I need to buy a paper version to annotate it, but right now I'm on the road. And so, there's a striking point in this book. You may have seen it trending on Twitter. Mustafa Suleyman is the founder of DeepMind, which was then purchased by Google. And there's a few points in the book where it talks about 9 orders of magnitude. There's been a 9 order of magnitude improvement in compute. This is not... The human mind cannot wrap itself around 9 orders of magnitude. It's not possible. It's just not possible to wrap our mind around this. And so when you have a technology and an underlying technology that is moving that fast, you realize that the stock, even if the stock is up 200%, it might actually still be undervalued because the underlying technology is even faster. So we'll see where this goes. But this is, and you can see this book is categorized in social aspects of technology. So I'll conclude with this video by talking about just a little bit of Nvidia and a whole lot about AI and about this book, which is it's a bestseller right now, and a lot of very influential people in the field have recommended the book, which is why I'm gonna read that book. So AI is not hype. And I've never considered it hype with my biggest position, which is Tesla. Tesla is mostly an AI play, and I've always had 100% confidence in Tesla as the AI play. It was easy for me to consider Tesla a pure AI play, considering that OpenAI, the main trigger of that hype, right, was founded by Elon Musk. OpenAI was founded by Elon Musk, the same founder as Tesla. FSD, the most concrete application of artificial intelligence, visible. By concrete, I mean visible today. The most visible today application is self-driving cars. Videos. Look at these videos online. Millions of views. People can't believe it. I can't believe it myself. So AI, my main AI play has always been Tesla. I think I'm not the only one to consider Tesla an AI company. But it's tough to note when you look at a stock. It's tough to know whether they're getting into AI just because they want to get that premium valuation, or they're getting into AI because it's a meaningful technology. And I'm beginning to think more and more, and I'm beginning to be less and less cynical about companies getting into AI. I was too young, but I've read many case studies about the 2000s and the late 90s when companies would switch their names to .com. And so you would have a stock, and the stock would move from whatever company, and then it was whatever company .com. And whenever they added .com, the stock would get a 40% premium, etc. And so a lot of people, I've argued that, yeah, if you just add AI to your name, you're going to get a premium. And I think it's a largely cynical thing to say. The more I read about AI, the more we realize, the internet was a meaningful revolution, but AI is much more meaningful than the internet. Artificial intelligence is much more it's much more of a widespread change than the accelerating speed of information, which was the internet. The internet accelerated the speed of information. That was a tremendous revolution, but not nearly as the democratization of intelligence, right? And in this book, Mustafa Suleyman talks about really what makes the world is humans plus intelligence times energy. And I find it interesting that he puts energy and intelligence at the exact same level. And this is the point that I made multiple times on the channel, that intelligence and energy are highly related, and this is why demand for electricity, and this is something that he talks about in the book, demand for electricity should go from a 1.5 trillion revenue market. Right now, the worldwide market for electricity is 1.5 trillion of revenues up for grabs each year worldwide. By 2030, he's saying in the book, it's going to go to 4.5 trillion. And why is that? Because we need so much energy to run these AIs, to run these data centers. And anyways, I really highly recommend this book. That's definitely one of the best books I've read. It's very tough to find a good book. It's not easy to find a good book. There's a lot of books that I find repetitive, and it's just things that I've heard before said a different way. It's tough. If you have good book recommendations, put them in the comment section. I always find it tough to find a good book. I have a much easier time finding good content on YouTube than a good book. But the last quote-unquote good book there's a lot of good books, but the book that really struck with me recently, a few years back, was Abundance. You may have heard of the book Abundance, which was an excellent book in my view. The Coming Wave is kind of like Abundance, but with gloomier sections. And so if you read that book, you need to be careful, because the end of the book I find very gloomy, and the beginning of the book, he sets out a dystopian future in the first chapter, and I think it's too grim, and I think a lot of people, it's too negative. I think it's more negative than what's going to happen. I don't think it's going to be that negative. It's too grim. That's why this book was sold as a social aspects of technology. The beginning, I fear that a lot of people are going to put down the book, because they're going to be like, I'm going to read the first chapter and it's all doom and gloom, and you're like, okay, I'm not reading that. But if you can overcome that part and look at the center of the book, that's excellent. This man Suleyman has a deep insight into how AI works, and these are my main takeaways about what's going to happen to AI. So we're largely moving away from code in AI, and largely moving into this black box type of AI, where the AI figures it out on its own, right? And that's what happened with Tesla. Tesla's FSD12. You may know that they've just erased their 300 lines of code, and they just told the software, well, go ahead, figure it out on your own, right? And that's this black box type of AI, which I think is going to be the norm, where we're not going to be able to really look into the black box and figure out why AI did what it did, or why it did that move, right? We may not be able to figure it out. That's the point number one. And really, this is one easy way to understand this. Let me show you this. I don't know if I can show videos, but if you and this was an experiment from their book, right, from DeepMind. This is a game called Breakout, and this is how the AI figured out how to play the game. It didn't play it like a human. So as you can see, this is the Breakout, the old Harry game, and the AI figured out that it needed to make a hole, and then stopped working, right? So that's the AI figured out that the best way to win the game after a few games was to just make a hole and have the system do this on its own and win on its own. And this is a form of emergent thinking. This is a form of emergent intelligence. Nobody thought that this strategy would become up with the game. And then he goes on talking about AlphaGo. Same, the way the game plays Go, we don't really understand it. So I think this is one of the reasons why we're going to have outstanding, developments in AI. And I would be very careful investing in certain companies that say rely perhaps too much on human creativity or human intelligence, right? Because are we going to get into a world where you want to have a movie, you copy and paste a novel, and the AI makes a movie for you? I think we're going to move into that world. So anyways, that's point number one. Point number two is AI is moving towards robots and the world of atoms, not just ones and zeros. And he makes that very clear, that we're slowly moving into the world of atoms, right? Robots now have AI that is good enough. And so again, Tesla comes into play. That put Tesla again at the heart of the matter. You may have seen the latest podcast with Elon Musk saying that the ultimate goal of Optimus that was for the robot to be able to thread a needle, to thread a needle, right? And I'm not even sure I can do that. I'm not even sure a lot of people can do that. You need to be a expert at sewing to be able to do that, or you need to have good eyesight. And this say that's the goal for the robot, to be able to do that. So if the robot can do that, we're going to move into the next wave is going to be the world of atoms and AI running systems in the world of atoms. And everything I've talked about, when I talk about my end phase video, and when I talk about things like lawn mowing robots and all that sorts of robots, it's very clear that we're entering that phase. And clearly Tesla is the first example of a widespread robot, right? The cars, one way to think about cars is to think of them as robots. And if they drive themselves like they are beginning to, they are robots, right? And if you have a fleet, some people estimate the fleet of Tesla cars will be 100 million by 2030. The run rate that a lot of cynics are going to be, they're going to do only 5 million. I've seen analysts for Tesla say, they're going to do only 5 million cars in 2030. I think that's way too low. They've guided 20 million. I have no reason to believe they're not going to reach it. They've guided 20 million, but even if it's 10 million, it doesn't matter. There's going to be a huge fleet of cars who are going to act very much like robots. And so those robots are going to be driven by AI. And, that's going to be a major change. And the last thing is biotech. I learned a lot from Suleyman's book about biotech. And this is a field, that I need to look more into. But the whole idea that, research in biotech has been entirely disrupted, and there is a very clear connection between biotech and computing. And this is a quote from the book: about 50 kilos of DNA strands can store all of the information ever created by mankind. Because what happens is, because of CRISPR-Cas9, you can now recode and so modify and code the DNA. So theoretically, you could inscribe mind-boggling amounts of information in DNA strands. On DNA strands, you can inscribe mind-boggling amounts of information. And so he's predicting that, maybe 10, 20 years from now, there will be a merge between biotechnology and tech as we know it, right? Hardware tech, semiconductors tech. So fascinating stuff, fascinating book. Again, be careful. The first chapter is very depressing. So if you want to read this book, I'd be very careful about the first chapter. And the last chapter is about government. So maybe it's a little less interesting for us as investors, but the center is definitely interesting for us as investors. So anyways, a very different video today. My more structured videos are coming back. Don't worry. Don't unsubscribe, please. It's coming back. I appreciate your likes. No investment advice ever on this channel, by the way. Please like the video. Please subscribe. Follow me on Twitter. Have a wonderful day.